Hi everyone, Joe Kehrig, Managing Broker at Coldwell Banker Real Estate in Danville, and this is your San Ramon Valley Real Estate Update, the week of August 17th. So, how's the market going? As you know, the last month and a half, it's been super heated, for a number of reasons. One is obviously interest rates at 3% are in some cases lower. We're getting a lot of people from the Peninsula, from San Francisco, coming this way because if they don't have to live in the city, for what they're basically paying rent for a two-bedroom condo, they can buy $1 million home out here and have some space, have the extra rooms. Because people now, though we're starting to see maybe a light at the end of the tunnel, it's going to be a while before we get back to normal. Hopefully the kids get back in school safely, sooner than later. But from a work standpoint, most of the people that I'm talking to, most of our clients and friends, where they've been, furloughed, not furloughed, but they're working out of the house, they're basically saying that till next June is when the companies are putting them out. So they're basically, and even when they go back to work, they feel it's going to be on a moderate schedule, maybe 50% at home, maybe 50% in the city. So if you only have to commute a couple days a week, then people are living where they want to live. They're trying to spread out, get a little bit more room. So we're getting a huge amount of people coming from the Peninsula, from the San Francisco area, where you can literally, for what you're renting a place in San Francisco, you can probably buy $1 million home here. So that's a lot of things. Like we talked about before, when is this market going to end? Well, here's what we know. We know that number one, everything is about supply and demand. You put me any place in the United States, just show me the active and the pendings, and I'll tell you where the market's going. Well, we know that we have a lack of supply. There's no doubt. And that's only going to get worse. They say in the United States we're 2 to 3 million homes under what we should be to take care of the need. And certainly in San Francisco, Bay Area, and California, they're so restrictive as far as building. We're never going to catch up. So the supply is always going to be low. So that's number one. And then you look at, okay, where's the demand coming from? Well, the demand's coming from people that want to get into a house, take advantage of the low interest rates, or have a lot of certainty in the market and in the real estate. So what can change? Well, we know that supply isn't really going to change. We're not going to see this where we're kind of out of whack pendings compared to active properties and basically be in a seller market. It's not going to come back because we're going to see a ton of homes hit the market because there just isn't. They put out a study, the banks put out a study, and where we used to go that everyone moved every 7 years. Well, they came out, I believe it was Wells Fargo, that said every 13 years people are moving. So it's almost double. People are staying in their homes a lot longer. I know with myself, I deliver a little anniversary gift to all of the clients that we sold homes to. And boy, every month I have 2, 3, 4, 5, 6 people that I'm delivering their anniversary gifts for the 20th some odd year. So people are definitely staying where they're at. The only thing that can back off, that can slow this market down a little bit from it, where it's superheated right now, is really more lack of demand, because we know the supply is going to stay low. But as the demand pulls back, then the supply will build up a little bit more. But we know that it's not going to be interest rates. Anybody you talk to, the economy is still, in a lot of parts of the economy, limping along. So no one's anticipating the interest rates going up. But how could the demand back off? Well, number one is it could be, as we get closer to the election, what people are really afraid of and what keeps people from buying or doing anything is certainty or lack of certainty or fear of the unknown. And as we get closer to the election, I will tell you, where this country sits right now, no matter what side of the fence that you're on, 50% of the people out there think the country's going to go to hell after the election, depending on who gets elected, because our country is pretty much split, right down the middle. So there's going to be, 100% of the people going into the election are going to be cautious because 100% of the people know that things might change. And if the other person, whoever that other person is for them, gets elected, that the economy, might go down the drain. So if you've got both sides thinking that, that's almost everyone. So the uncertainty will come in and the fear of the unknown, as we get closer to the election, that might back things off a little bit. And then obviously once the election happens, half the people are going to be upset and feel that, the country's going into a garbage can, however, whatever side that you're on. So anyway, we don't see a really end in sight. Definitely now we have seen, and you'll see the graphs when we go through it, we have seen the last couple weeks just a little bit of a slowdown. But see, we don't know if that's because we talked about it. February was the best February in 13 years. Then we hit March and we had COVID-19, and the real estate market just kind of stalled. And the February, March, April, May are the busiest times in the real estate season. That's our sweet spot. Well, what kind of happened is when June hit and things started opening up a little bit, our real estate market opened up. So literally, our March was this June. So we're kind of in the middle of our spring season. But what hit us the last couple of weeks is the last 5 or 6 years, the slowest month of the year was August, every single year. Because what happens is people are getting ready for school, they're getting their last vacations in, they start school, they're getting settled down. Now, after August and September, it usually picked back up, but there was definitely a lull in August. Now, even though the kids aren't in school, people are getting their vacations in, obviously they're remotely learning. We did see a little bit of a tick down. Now, what's really going to be important, is this going to be a trend? Is this kind of the end of our spring season? Or is it just a short stint because of people getting their vacations in school? So when I talk to you again in 2 weeks from now, it's going to be interesting to look. But let's look right now. Let's look at the first chart. So the Q3 GDP forecast by the leading economists, and you can see Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, et cetera, et cetera. 5 of the 9 there feel the GDP is going to grow by over 20%. And then the other 4 are all over 15%. So certainly the experts out there know that we're in a heated market, and obviously with people getting back to work, there's still some businesses that are closed, but a lot of businesses opening up, that the GDP is definitely on the upswing. So again, that's almost across the board. So let's look at our first graph of San Ramon, and you'll see what I mean a little bit, where we're just starting to see it tick back a little bit. Look at, properties are still selling, but look at the pending trend going down from 130 to 123. And look at the listings going from 83 up to 91. Now, there's still a lot of homes that sold, because even though you got 7 less pendings, you had 26 closed, which means there were 19 sales last week in San Ramon. So, but you still see a little bit. Remember we talked about that in a normal market, you have like actives here and pendings here, and now it's inverted, which is basically a seller's market. It's still inverted, but you can see those numbers just a little bit have adjusted. Now, you won't see on my graphs here, but I was talking to another real estate professional today who maps out Walnut Creek, and they said they're seeing the same thing, where the pending properties went down a little bit and the active properties went up. So Danville, Danville kind of reversed that trend just a little bit. It seems like San Ramon and Danville kind of bounced back and forth, because you had the pending sale goes from 135 and 142, plus the 24 closings. You had 31 properties that went pending in Danville last week. And because of that, you saw obviously the pending sales went down by 13. So where it was staying pretty steady, and you actually saw last week the active properties jump up, you saw them go down this week. So again, still a very active market, still a seller's market. Though I can tell you on the Kehrig real estate team, we had literally one property in San Ramon that we got 9 offers. It was listed at $1,350,000, 9 offers. It sold for $100,000 more. And another property just in the last couple of days that, again, these prices were on the higher range. We got 4 offers and ended up selling $80,000 over asking on a property in Danville. So things are definitely, the nicer listings, the ones that are priced well, are still obviously getting multiple offers. So you can see Danville's still doing well. The Blackhawk market, now you see that the pendings obviously went way down, though we did have 6 closings, so it kind of evened out. But the actives are, staying about the same. So you're seeing a little stabilization in the Blackhawk market, where of course the average price range of the actives are like 2.7 million. The average price of the pendings are like 2 million. And so a couple of weeks ago, the average price of the solds were like 1.5. So in upper end markets like Blackhawk, people are picking off the low hanging fruit as far as price wise. Then you look at Alamo. You're seeing the same thing with Alamo that you saw, I mentioned in Walnut Creek, you saw in Blackhawk, and you saw in San Ramon. You can see the active properties are just ticking up a little bit. Pendings are ticking down a little bit. So definitely, it's going to be really interesting to see in a couple weeks if these things flip-flop at all, because it is showing it's still, don't get me wrong, it still is a seller's market for those nicer listings, but you're starting to see just a little bit of a pullback. Now, is that basically just because it's August, or is that maybe a trend that's starting as we get normal because of our spring season started in February and then went from June, July, and we're almost at the end of August? That's normally when we would start to slow down in a normal pre-COVID market. So now you can see Dublin. Dublin, again, the same type of thing where you see that the pending sales are staying pretty consistent, but just a little bit, but you see the active properties. So in every market except Danville this last week, you saw a little bit of a stabilization of the market. Now, again, we'll look at it in a couple of weeks and see if that holds true. So let's look at the list price, the sold price percentages. No surprise here at all. San Ramon, 103%. So on the average sales price to the average list price, they're going over asking. So Danville, same thing, and that's always been pretty consistent. San Ramon, Danville. Blackhawk's always been in the high 90s, because again, when the average price of $2 million, less buyers, there's more properties, and there's a little bit more negotiating. Alamo stayed very strong, 100%, in Dublin, obviously, 99% had always been around 100%. So the market again is extremely active, and again, if you have any questions at all, Joe Kehrig, managing broker of Coldwell Banker Real Estate in Danville. And my cell number, 925-487-6838. Again, 925-487-6838. Email joe.kehrig, Kehrig, at cbrealty.com. This is an overall view of the market. If you want any information on your particular home, no obligation. It's easy for us to go in and dive deep on any certain property. We'd be more than happy to provide you that information, even if it's for a refi or you just want to get an idea. Give me a call. Have a great week. Be safe. Hopefully the kids are working hard and the remote school. From what I understand now, Contra Costa is allowing the schools now to petition if they're safe for the kids to come back, which is a good thing. I think there's got to be a choice there. I think the schools have to set up for parents that want to have their kids go in, but at the same point, there's got to make sure there's a setup for the parents that aren't comfortable with their kids going to school. So as always, may God bless you, may God bless your family, and may God bless the United States of America. Have a great week, and we'll see you in a couple weeks.